webinar is very, very pertinent to us as accountants of Uganda and also as lawyers, because I believe that we cannot survive alone as accountants, or the lawyers cannot survive alone as lawyers. This should be in partnership. That's what brings the juice very well, and we can call it a cocktail. And that's how we shall serve our nation. And the people who will benefit will be the beneficiaries. The people whose businesses will be restored, and the people whose businesses will actually be helped from being insolvent, or if it is to be in insolvency, then it should be done in a legal way and without any losses. So we have various panelists who will handle this topic of business restructuring and insolvency practice. And among these, we have Rita Baguma Birungi, the Associate Practitioner, Insolvency and Business Restructuring of Rigomac Advocates. And then we have Mustafa Ntare, Director Insolvency and Business Restructuring for URSB. Then we have CPA Kenneth Makanga, a partner at BDO East Africa. Then Mr. Isaac Bakayana, President, Association of Insolvency and Business Restructuring Practitioners of Uganda. Again, we thank our partners, the Insolvency Practitioners of Uganda and the Institute, for bringing this to us. And without wasting any minute, it is exactly the time we had set for the first speaker. Allow me to welcome the first speaker as per the program to get the ball rolling. Thank you very much. The chair is myself, Obed Mkweri, CPA, for those people who were not yet admitted, just for purposes of record. Thank you. You are most welcome. Let's get the ball rolling for the first presenter.
Thank you so much, Mr. Obed. Good afternoon, everyone. As introduced, I am Rita Baguma Birungi. I'm an associate partner with Rigomac Advocates and a member of the Association of Insolvency and Business Restructuring Practitioners of Uganda. I practice insolvency in Rigomac Advocates, and I am happy to be here. I do hope that I will be able to communicate with everyone, and I'm looking forward to this discussion. I'm looking forward to the questions and to the deliberations. I have 20 minutes, about 25 minutes that have been given. I suspect I might take a shorter time, but my topic for today was business rescue and insolvency practice in Uganda. I've gone into the understanding of insolvency, and I believe this is one area, particularly the question of insolvency is one area where you as accountants would understand more, because the question is a temporary or sustained reduction in cash flow and liquidity that affects a company's ability or an individual's ability to meet their financial obligations as they arise. The tests that have been recognized from time immemorial are cash flow and balance sheet tests, which are really cash flow, as you understand it more, is ability for them to run their short-term obligations, and then the balance sheet is the liabilities versus the assets. So when a company is referred to as insolvent in the meaning of insolvency practice and in the law, it is when it is unable to meet its obligations or its balance sheet is not, for lack of a better definition, balancing. The concept of business rescue is one that has been talked about for years and centuries, but the practice is what hasn't been happening until about the early 1970s. The definition that I managed to get, which is more clear for us, is one in the UK law. Our Ugandan law doesn't describe it. It talks about the Companies Act of 2008 of UK defines it as a procedure that aims to facilitate the rehabilitation of a company that is financially distressed by providing the temporary supervision of that company, managing its affairs, its business and property by a practitioner in the belief that that company and its assets can be saved. The historic position of insolvents has been to kill, and many authors and writers and courts have recognized that you don't want to be in a position of a debtor historically. The question of business rescue, which came up, I'm going to show you the groundbreaking brief shortly, but it's they looked at as proceedings that are aimed to facilitate a rehabilitation of a company by providing for, like I said, the temporary supervision, a moratorium, which is a stay on claims against the company, and then the development and implementation of a plan that will be able to help that company to restructure its business and assets. That slide goes on to just emphasize that the restructure is to enable the maximization of the likelihood of a company to continue in existence on a solvent basis, and to provide a better return for creditors, because I think we can see that many times when companies go into liquidation, the value goes down, and then creditors get much less than what they actually put in, and shareholders most of the time always lose on their investment. And business rescue is aimed to avert these kinds of scenarios, and worst case scenario, give a better return to the stakeholders. The groundbreaking is on business rescue was a committee that was initiated in the UK in the late 1970s. It's famously known as the Koch Committee. It was headed by a gentleman called Kenneth Koch, but it was a report on the review of the insolvency law and practice in the UK. And this review led to the famous 1986 UK Act and their Enterprise Act, which many of our countries in Africa and across the globe have followed since, including Uganda. This committee was appointed, and this background is important because that committee speaks to what our insolvency law and business rescue practice is today. And I request that I'm allowed to just briefly highlight for you. The highlights of their report were that the central argument was that too many companies were left to die, and then countries need laws that encourage a rescue culture to restore companies back to profitability, which would be in the longer term interest of creditors. Private insolvency practitioners before that period were not regulated. Anyone would take on a liquidation, would take on a receivership, and this committee recommended that the practice of insolvency should be professionalized to ensure their standards. And Mr. Mustafa will take us through that particular aspect as far as Uganda is concerned. And then they recognized that creditors needed to be given a greater voice in the choice of a liquidator and any practitioner, and then an obligation on directors to run their companies well. And so errant directors should be penalized. The key players in business rescue, as we're going to see, are number one, the creditors, number two, courts, number three, the insolvency practitioners, the company directors, the employees, and specialist advisors. The specialist advisors, allow me to explain, are because of the various businesses that we handle. Insolvency practitioners worldwide are mostly accountants and lawyers, and we are called to manage businesses which are out of our specialty. So the laws and countries allow you to call on people who understand that business well to advise you, to help you through your restructuring. In Uganda, Uganda initiated a review under the Uganda Law Reform Commission that led to the passing of our Insolvency Act. And the aims of this act were to provide for an orderly management of assets. Before you will find, and the practice is slowly phasing out, is that as soon as a company becomes insolvent, the creditors just come and grab whatever they can out of it, and there's no management, there's no order at all. And then to increase the value of the insolvent estate for the benefit of the general body of creditors. I'm going to show you how that is being done, and of course rehabilitation of the insolvent. Some companies have generated a bad image with their creditors and their other stakeholders, and they have managed their employees. So that rehabilitation is part of what is intended in business rescue. And of course there's modernization. We had a series of laws that were talking about one subject, and it was hard to apply an orderly management. And this commission was looking into how to harmonize these positions and have one law, which is now our Insolvency Act. And finally, the regulation of the insolvency practice was one of their objectives. We're really following the UK text. Regarding our particular context in Uganda right now, as far as business rescue is concerned, our law now allows a person, now I'm talking about individuals, they have the option of applying to court for what is called an interim protection order. And when you apply for it, you're really asking court to cushion you against all the creditors so that you can put them together and present a proposal to them so that they don't tear you apart. And that is an introduction in our law, which is the Insolvency Act, that then protects a debtor from bankruptcy proceedings, from arrests in execution, from distress on your property, and it enables you then to address your creditors in a manner that can allow you to organize your affairs, stay afloat while you're paying them. That is part of promotion of business rescue. The next big aspect, which is critical in business rescue and an invention in a corporate business environment, is administration. According to the famous Koch report, which I just highlighted, actually, which introduced the concept of this administrator, the intention was to consider the reorganization of a company and its management with a view to restoring it to its profitability. And I'm going to show you slightly how it's done in the Ugandan context. To ascertain whether a company of doubtful solvency may be restored, an administrator does that. To make proposals for the most profitable realization of assets in the event that the company cannot be revived, or to continue to carry on the business where it is in the public interest. I think you will see in Kenneth's presentation scenarios where these particular objectives have been achieved or intended to be achieved, and through the process of business rescue and restructuring. The key notions underpinning administration are, and which is critical for practitioners, which is critical for company directors, rescue opportunities should be taken sufficiently early in the corporate troubles to increase the chances of success. The longer you take to seek intervention, the harder it gets to recover. And which is one of the biggest problems we have in Uganda, is that directors struggle with their companies silently, and then also the creditors are looking on, and by the time a practitioner is called in or an advisor is called in, it's already too late. Assets are alienated, employees have gone, business partners have abandoned, and it's hard to recover. Secondly, is that companies should be given a breathing space from the pressure of claims. You're going to see this more and more, and it's very important because it's hard for us to practice. It's hard for a company to be able to recover when it's being pulled on all sides. But if I'm allowed to breathe and I get that protection, then I should be able to explore all my options and present them, and the chances then of my recovery are higher. I should be able to get an ear from the creditors. And the last and probably one of the most important notions now is the consideration of interests of not only creditors and shareholders, but of the widest group of parties potentially affected by the insolvency. Some rescues might fail because you don't have the support of the employees. And you're not looking at them because they're there, but if they're not well paid, if they're not motivated, if you have some suppliers, they're paid, but they're not motivated, or if you have a regulator who's not supporting your restructuring process, then you do not have, your chances of success in that administration also become slim. So these are very key aspects that need to be taken note of. Now, in our particular Ugandan context, we are going to see our law, what our law provides, that the parts that have been implemented in some of our administrations that are happening in Uganda right now, and how they feed into the aspect of business rescue. A company can apply to court for interim protection as it presents a settlement proposal to its creditors. That is what enables it to breathe and think. This is, of course, after it has passed a special resolution. All creditors are put at bay for the company to be able to prepare its proposals. A company can then appoint what is called a provisional administrator to study its affairs and then make recommendations, which will then be presented to the creditors on how their claims can be addressed, at the same time keeping the company afloat. It's creditors in Uganda and generally over worldwide that resolve on how to proceed when it comes to an administration. If they have an agreement with the provisional administrator's proposals, they sign an administration deed, which then binds them to enable the company to implement and continue. The concept of administration deed, I'm going to explain a bit shortly, but this is what the provisional administrator does, the effect of provisional administration, which enables the breathing and also facilitates business restructuring. It suspends all liquidation proceedings that may be commenced. As we may all know, liquidation is really to wind up the business, which is not the view of business rescue. It suspends all enforcement processes. So a debenture holder cannot appoint a receiver when you have commenced provisional administration. If there's a liquidator or a receiver who had already been appointed, their functions are suspended to enable you to resolve whatever issues that the creditors may be having. It freezes any dealings in company property, so you will not be able to dispose of assets or charge any more assets to create any more liabilities. It freezes any legal proceedings against the company. They suspend immediately. The law automatically suspends them. And then it freezes on any execution proceedings, any arrests on account of debt or attachment of property is suspended as soon as a provisional administrator is appointed. Once a provisional administration is commenced and the creditors agree to the proposal of the provisional administrator, they sign what is called an administration deed. I know Kenneth will give you examples, but the most prominent right now, the most recent right now that is happening is the case of Uganda Telecom, which is right in front of us. Similar processes were followed, and right now it's under administration. And this deed is simply providing for how the company should be managed to enable it to resolve its insolvency position. There are different options, and the sky is the limit to if I'm to, so to speak, because they give room to the business and the administrator to be able to come up with options that can be able to resolve the financial crisis of this company. It can go to obtaining an investor, from obtaining an investor to funding, just selling the assets of a company, to borrowing, to whatever option, as long as it keeps the company afloat and the creditors are paid. And sometimes the creditors are not fully paid. That I must communicate, but the plan is for them to be paid. What must be noted is that an administration deed is a binding agreement between the company and its creditors. So all creditors who have been a party and who whose debts have been, who have submitted claims are bound by this deed. So you cannot come back and claim against the company during that period. Again, to emphasize the question of business rescue, the provisional administrator has powers to carry on the business so that it doesn't collapse. They have powers to continue to run the company. You don't lose momentum, you don't lose your clients, you don't lose your employees. You can appoint and remove directors, you can meet creditors from time to time and perform all such functions as the deed provides or the law allows. The other component of business rescue, at least in the Ugandan concept, is a receivership now. Historically, receiverships were really an enforcement mechanism for one creditor who has security to appoint someone to realize that security, just as they do for mortgages. The change in the law has pushed an obligation on receivers to also ensure that they do not collapse businesses, because the initial position was that they would just sell the assets and then the company would end up in a liquidation. A receiver can be appointed by court or by express powers of a debenture. A receiver is given powers to take possession and manage the business and realize the security. And the receiver is deemed to be the agent of the company, at least under the law. Generally, they are concerned with, I mentioned that they're concerned with realization of assets that are subject to a charge, but the law adds more burden, and we're going to see shortly. I've just briefly tried to explain what a floating charge is, just in case there's anyone who needs to appreciate it. It's really an equitable charge on present and future assets of a company. It enables the company to continue running its business subject to that charge. That charge crystallizes when there's an event of default, and then the company can no longer deal with its assets. So in such scenarios, the option available to the creditor is to appoint a receiver to then realize those assets, which is what is called a receivership. Under our law, the mandate that it gives a receiver is what emphasizes the concept of rescue, that a receiver can carry on the business and manage the company's affairs and property. They can perform any act that directors would have done. They can demand and recover money for a company. They can manage the property. They are mandated to keep accounting procedure, keep information in accordance with the accepted accounting procedures and standards, keeping full accounts, investigating the affairs of the company, and then reporting to creditors. All those come with a duty, a fiduciary duty to act reasonably, to act in the best interest of the company, and therein lies an obligation to keep the company afloat. Our law also recognizes protection of an insolvent estate to the extent that then we can be able to preserve assets of that company that will facilitate a rescue of the business. There are certain transactions that the law has made voidable, which means that they can be set aside by a practitioner when they are appointed subsequently, if they find that those transactions affect the value of the estate. One of those transactions is where you transferred property within, sorry. A transfer of a property within 1 year preceding the insolvency proceedings is suspicious. It gets on the red list of why did that property go? If that transaction is at an undervalue, it automatically goes into the red zone of maybe the value could have been preserved, and so that transaction can actually be set aside, and that asset is either brought back to the company or the value of that asset is paid into the company. If it was a charge created a borrowing and then you mortgage the property of the company during 1 year preceding those proceedings, the insolvency proceedings, even that transaction can be set aside because you're probably adding liability to an already burdened company, and maybe giving another creditor a better position than other unsecured creditors. So that kind of scenario can affect the recovery position of a company. And so if a transaction is set aside, that asset can be relieved and added to the value of the company. Of course, the other transactions are insider dealings, which targets transactions entered in with connected persons, spouse, children, uncles, aunties, persons who are with a close relationship with the directors of a company. Even those transactions can be set aside.
I hope Madam Rita is winding down.
Yes, I'm actually on my last slide, my second last slide. Thank you so much. The other component is cross-border insolvency, which is really a basic concept of recognition of proceedings that are happening in respect of companies that have sisters or parents in other countries, that if proceedings happen in the other country and they are registered here, they can be recognized, and so a solution is adopted for the entire group of companies. Or if it's here, we can still go and register in another country, and we try and avoid the ripple effect happening. Finally, I think just to conclude is that the business rescue approaches in Uganda are: one, debtors can apply to court for protection to cushion themselves from the tear of creditors. There's an opportunity to negotiate with creditors, and courts can compel some of them to agree to some proposals. There's now a recognition of the general body of creditors. We don't deal with one creditor and then another comes tomorrow. We want to look at all the creditors. There's a regulation of insolvency practitioners, which my colleague is going to present about just shortly. And then oversight of processes by various stakeholders, like I said, the courts, the employees, the creditors, the regulators. There's protection of insolvent estates now, and then the recognition of cross-border insolvency. Thank you so much for listening.
Yeah, thank you very much. If we were in a hall, we would really rise up and clap for you. You have done justice to this, and really anybody who didn't know about insolvency practice in Uganda and the business restructuring, we now know the definition and how it is done in Uganda. And I know you have raised the appetite of many to know that they can be protected. There could be somebody who has been struggling, and through this, at least he knows that there is hope of the business, and even the debtors and creditors not tearing him down, but he has a way of cushioning it out. So we are going now to URSB, and every person who will face insolvency will have to go to URSB in Uganda, and there is a director for insolvency, business restructuring, and let's have the presentation from him so that we can know how to go about it the practical way, and he's going to deal with regulation of insolvency practice in Uganda. Thank you very much. The floor is yours. And that is none other than Mustafa Ntare, the Director Insolvency Business Restructuring at the URSB. Ntare, you are most welcome.
Yes, thank you very much, Mr. Moderator, and good afternoon, everyone. I'm happy to be here this afternoon, and the assignment I have is to talk about regulation of insolvency practice in Uganda. I also have 30 minutes, around 25 minutes. I will ensure that I finish within that time. This presentation, I'll talk about our office as the regulator of insolvency in the country. I'll talk about the regulation of insolvency practice, as well as ethical standards we expect from insolvency practitioners as regulators of the practice. I will start with a brief overview of our office. Our office is established by the Insolvency Act. I know I will not go into the details of particular sections. I know some of us may not really be interested in those sections, but the guiding law for our work is the Insolvency Act. The Act specifically creates the office of the official receiver, and it says that the official receiver has to be appointed by the Minister of Justice and Constitutional Affairs. And the Minister of Justice and Constitutional Affairs appointed the Registrar General as the official receiver. That's why the official receiver function is within URSB, because Uganda Registration Services Bureau is headed by the Registrar General. The official receiver is the regulator of insolvency in Uganda, but we have some cases where he has been appointed as an active person, especially in cases where a court has ordered winding up of companies who have had cases where the official receiver has been appointed as a liquidator. Most recent examples include Nakumat Supermarket Uganda Limited, Uchumi Supermarket Uganda Limited. And those are the major cases, instances when it's actually a court appointment. In cases of voluntary appointments, as a matter of practice, we strongly discourage against such appointments because we believe in a regulated environment, we shouldn't be competing with you, the people whom we are regulating. So if a company is undergoing voluntary winding up or voluntary reorganization, those are cases which we would decline as an office, except if it is a state-owned entity. That's when we may consider taking up the appointments to handle those entities. Of course, we are government, and if government needs services of office, we cannot turn down the request. Otherwise, that's based on practice, but there is no legal prohibition from appointing the official receiver as a liquidator or an administrator of any insolvent estate. I mentioned that we are principally regulators of insolvency. Rita mentioned in her presentation that traditional insolvency practice was not a regulated profession. Before the enactment of the Insolvency Act, actually everyone could qualify to be an insolvency practitioner. Anybody who could be a bailiff, a court broker, anybody you could find could qualify to be an insolvency practitioner and could be appointed as a receiver. So the challenge which was posed by that arrangement was that cases of misconduct, if they arose in case of professionals, complaints could only be addressed to the respective professional bodies. That's if you are lucky that a person appointed was coming from a professional body. For example, you appointed an accountant or a lawyer. The person could complain to the Institute of Certified Public Accountants or law counsel for that matter. Of course, the situation would be disastrous if the person appointed did not fall under any of the professional bodies which we know. It would mean that the only recourse you could have as a person who has a complaint against that person, you could probably go to the courts of law and challenge his actions. So it wouldn't have an alternative method to discipline the person. Now, with the enactment of the Insolvency Act, the Insolvency Practitioners Regulations, and the Insolvency Investigation and Prosecution Regulations, insolvency practice has been professionalized in Uganda, and it is now a regulated practice like any other area of practice in the country, with those powers vested with the official receiver, which essentially include the powers to register insolvency practitioners. If you are to handle any insolvency related work, you must be registered with the office as an insolvency practitioner. And for that matter, we maintain the insolvency practitioners register. We also have powers to investigate the conduct of insolvency practitioners, and if they are found to have committed offenses. I mentioned the Insolvency Investigation and Prosecution Regulations. We have powers actually to prosecute any insolvency practitioner for any offense he has committed. Last year, we got delegated powers from the Directorate of Public Prosecutions, where as an office we are at liberty to take on an insolvency practitioner and prosecute him for an offense without seeking assistance from the Directorate of Public Prosecutions. Also act in case of vacancy in the office of an insolvency practitioner. For example, if you have been appointed as a liquidator or receiver and for any reason you resign, of course, in that case, what is expected from you is to notify our office, and we take up the assignment on an interim basis as the company is reorganizing to make a fresh appointment. You are aware that as an insolvency practitioner, you must give reports to the official receiver on the various assignments you are handling on a case-by-case basis. Usually, we require reports after every 6 months. And at the end of the year, before you renew your registration as an insolvency practitioner, you must give us a return. There's a form which you fill as annual return, which indicates the work you have done and the progress of those assignments. That information must also come to our office. And finally, in case of non-compliance with the statutory requirements, we have powers to impose fines. We have had such cases, so I would encourage everyone to always be keen on the timelines which are set out in the Act, and always be compliant to avoid those fines which may be invoked by us. I'll go to the next question of who can engage in insolvency practice. The Insolvency Act gives a fairly broad definition. Actually, it gives a list of people who can be called insolvency practitioners. These are receivers, provision administrators, liquidators, provision liquidator, proposed supervisor, supervisors, and trustees in bankruptcy. For any assignment which you would wish to take up, where your appointment, the instrument of appointment is designating you as holding any of those offices you have mentioned, then you must be fully qualified and registered with our office before you could accept the appointment. You cannot act as a receiver, you cannot act as a trustee in bankruptcy, you cannot act as a liquidator unless you meet the qualification requirements which are set out in the Act. The Act also gives the minimum qualifications of such persons. It specifically says you must be a lawyer, an accountant, or a chartered secretary. That's condition number 1. Condition number 2, you must be a member of the relevant professional body, specifically for the members present in this conference. You must demonstrate that you are a member of the Institute of Certified Public Accountants of Uganda, and you must have a security or professional indemnity for the proper performance of your duties. And we normally accept insurance, professional cover, which is normally taken out by the firm, if you can prove that you're a member of that firm. Insolvency practitioners must register with our office. I mentioned earlier that we have the Insolvency Practitioners Regulations, which specifically require insolvency practitioners, any person who intends to do insolvency-related work, to register with our office. You fill an application form, which is in the schedule to those regulations. You attach your certified academic documents. You attach proof of membership with the professional body. In this case, you can give us a practicing certificate from the Institute of Certified Public Accountants, which authorizes you to practice accountancy. Then you give us evidence of professional indemnity. As I mentioned earlier, we accept insurance policies which are issued in favor of the firm which you are working with, provided you are a member, and then evidence of a bank account for insolvency matters. When you read the Insolvency Act, and one of the principles as insolvency practitioners which you need to know is that an insolvency practitioner must keep funds of the insolvent estate separate from his personal funds. So for that matter, I would expect you to present an account which you have designated for purposes of insolvency cases. And then you also need 2 passport photographs to attach on your certificate. Those documents will be submitted to our office. Currently, I will receive them online because of the COVID situation. They will be processed, and then you receive a certificate of registration. Usually, if the application is complete, usually within 1 day, you'll get yourself registered as an insolvency practitioner. When you have been duly registered, the expectations from our office as regulators, we expect you to observe ethical standards that are set out in a number of instruments. But generally, as an insolvency practitioner, you're expected to act diligently in running the affairs of the company. And of course, you must ensure that you facilitate reasonable realization of the company's assets. We note that insolvency practice is a collection of basically 3 professions. I mentioned that you must be a lawyer, accountant, or chartered secretary. And therefore, different standards may apply to people from those different professions. But the Insolvency Practitioners Regulations now provide what I would call a unified code of ethics for insolvency practitioners, regardless of the background. If you have crossed into this area of insolvency practice, there are some minimum expectations which you have as an office. Now, just briefly go through them, which include, those ones include integrity. You must be honesty. You must maintain honesty in all your professional and business relations. You must act objectively. You must demonstrate competence when you are undertaking your duties, and you must ensure confidentiality of the client's the information that comes into your possession. And of course, you must behave professionally. I'll refer you to a fairly recent decision from the Supreme Court of Uganda, Patel versus Henry Wambuga. And the Supreme Court also laid additional expectations from an insolvency practitioner. It specifically stated that the duty of care imposed on a liquidator is of a very high standard, and his duty is owed not only to the creditors, but also to other members of the company. And the liquidator should not press the interests of one creditor over and above the interests of any other creditors, and above the interests of the company. The court also said that the law imposes a high duty of care on a liquidator because he is a professional and has a fiduciary relationship with the company in liquidation. He is therefore expected to act reasonably and in the best interest of the company. He must establish the market value, that is, in case he's going to sell the assets of the company. You must establish the market value of the assets, as well as the forced sale value prior to the sale of such assets. And failure to discharge those duties by a liquidator amounts to a breach of such a fiduciary duty, which also amounts to fraud and therefore actionable. We have a body called the International Association of Insolvency Regulators, IAIR. Uganda is a member of the International Association of Insolvency Regulators, and it has issued the principles on regulatory regime for insolvency practitioners, which are largely captured by the principles set out in the schedule to the Insolvency Practitioners Regulations I mentioned earlier. But briefly, it emphasizes that you shouldn't accept an appointment if you reasonably believe that you don't possess the requisite experience and expertise to handle that assignment. In other words, you should be honest enough. If a client is giving an assignment which is too big for you, be honest and please refer him to a better person. You must also prevent actual or perceived conflict of interest. I think that is fairly straightforward. And you must perform your duties in an independent manner. That is also extremely important. As an administrator, or liquidator, at times you are torn apart between maintaining the creditor's interests or the company's interest. You shouldn't choose a side to favor, but you must act professionally and independently. That is our expectation. I'll also highlight some of the areas for insolvency practitioners cases where you can be found liable. I must state that the offenses which can be committed under the Insolvency Act, and as I stated earlier, such offenses can be prosecuted by the official receiver. The number of offenses which are stated, for example, you're required to prepare reports. You shouldn't act without qualifications. If you do, it's an offense. Those are cases which are if brought to our attention, we can prosecute. You can get prosecuted for such cases. And if you are found to have acted improperly or fraudulently, you can be found liable by court, and you can be held to account or be made to pay. And I would emphasize that the whole purpose of having professional indemnity is to cover in such cases of liability. We are all human beings, and human beings make errors. That's why I emphasize emphasize, that's why we emphasize on possessing professional indemnity. In such cases of liability, the insurance company should be able to come to your rescue. I'll emphasize that insolvency practice is not business as usual. If a company is operating normally, as a CEO, you have the time to think about the decisions you are taking, and therefore the margin of error is really minimum. But if you have been invited as an insolvency practitioner, for example, as an administrator for a company which is going down, it's a reasonable expectation that the environment is not a normal environment. What we expect is that in all the decisions you take, you must take them with a view to have a better realization of the company's assets for the benefit of the creditors. In other words, we expect that in some cases you will be required to take extreme decisions which would not ordinarily be taken if the company was operating normally. That's something which we're aware of. As insolvency practitioners, if you're faced with such scenarios under our law, the courts have supervisory powers over your work as well. There are a number of provisions under the Insolvency Act which empowers the insolvency practitioner to apply to court to give directions on the number of issues which may arise in the course of liquidation or administration. Those are powers which, if as an insolvency practitioner you are stranded, instead of taking a very risky decision, you are at liberty to apply to court for directions on how best to handle the situation. We are considering, in the amendment process of the Act, we are considering decentralizing those powers to our officers, the immediate regulator of insolvency, because ordinarily the court directions are made by application. You have to first apply to court, which may take slightly much more time. So we have the opinion that if these powers, those directions and clearances can be given to our office, it may be a more efficient way of running, administering insolvent estates. Finally, I will highlight some of the developments which you may wish to note as insolvency practitioners. The Insolvency Act is currently under an amendment process. And at one point, we wrote to the Institute of Certified Public Accountants, and they shared their areas, proposed areas for reform. But among the areas which are being considered is giving the minister additional powers to prescribe additional qualification requirements for insolvency practitioners. Earlier I saw a question from one of the participants that insolvency is being dominated by lawyers. Instead, it should be dominated by accountants. In simple terms, that's what he was saying. Even lawyers, unfortunately, they are not here, but they also tell you the same, that they think it should be done by lawyers and not accountants. I must emphasize that whether you're a lawyer or an accountant or chartered secretary, you are not in competition. And therefore, I must emphasize that you need each other. In our work as regulators, I've received reports and work from accountants. I know where their problem is. Actually, the biggest problem is on appreciation of the law. And the biggest problem of lawyers is appreciation of numbers. So this insolvency work requires both the lawyers and the accountants to come together to achieve maximum results. That's my comment. That's my biggest point and observation for the time I've been in this office. Now, the dilemma we have, when the Act sets the minimum qualification requirements that you must be an accountant, it does not envisage the fact that actually, as an accountant, you need basic knowledge in insolvency law. Similarly, if it says you're a lawyer and therefore you qualify to be an insolvency practitioner, it does not envisage that you need basic knowledge in accountancy. So in most jurisdictions, actually, before you enroll as an insolvency practitioner, there is a special course of insolvency practice where you have to mix both skills as a lawyer or an accountant. In other words, a good insolvency practitioner should know both the law and accounts. That's the basic proposition which we are putting across. And in the amendment process, if the amendment passes, we would have insolvency practitioners first undertaking those mandatory cases. If you are courses, if you are an accountant, then you get basic knowledge in insolvency law. We are also finalizing drafting the Insolvency Practitioners, rather the cross-border insolvency rules, which will regulate insolvencies which spread across the borders. But the key point I want to point out in this presentation is that they'll provide for cross-border practice. If you are an insolvency practitioner, if you are based in Kenya as an insolvency practitioner and you are recognized in Uganda, how should you be regulated within our legal framework? Similar process will be expected to take place in other countries where such proceedings are taking place. We are also internally working on the automation process. So in the next 1 or 2 months, you should not be coming to our office to submit your applications at all, even the certificates. You should be able to upload the documents on our system. We process your registration certificates, and then you get your certificates from your office. We expect that project to be completed within the next 1 or 2 months. The moderator also mentioned that the webinar is organized in conjunction with the Association of Insolvency and Business Restructuring Practitioners of Uganda. As an office, we are fully aware of this association, and we work together, and all intending and registered insolvency practitioners as an office, I strongly encourage you to register and be members of this Insolvency Practitioners Association. Mr. Moderator, I think I have effectively used my time, and I would wish to stop here. I thank you very much.
Yeah, thank you very much. You are really on the dot, and we thank you. And if it was in a hall, we would really clap our hands. And indeed, we are stamping our feet for that insightful presentation, especially to us as accountants, the people who have not been registering, maybe because of lack of knowledge. This has been really good knowledge. And I like your assertion that we need each other. A lawyer is lacking accounts. An accountant, though we take law in our course, but I think the real practice and application, we need to get to the lawyers. And of course, the chartered secretary, they also need that. So I think the law that is coming into place will sort out this. So I want to draw your attention as our audience. There is a Q&A tab. You go in, type in your question. It will be received. And I request the panelists that the moment you see a question in the question and answer tab, please provide the answer. Because we might not have enough time to interact. So I draw your attention to that. Please, audience, utilize that. And panelists, go in and check the question that is related to you. And the audience might specify your name or it might not. But in case you see that the question is to you, really provide an answer so that we can save some time when we come to the interaction time. Otherwise, thank you very much. This is real practical in Uganda, and you are raising appetite, I know, for the accountants. And just to give you the information, you already have 300 participants. So that is really good enough. If you had an altar, you would call people and they would get to you. So I'm giving you that information so that you know how many people are really listening to this information. So we are going to someone who will actually now mingle these two. One was on business restructuring and insolvency practice in Uganda, and another one was on regulation of insolvency practice in Uganda. So we need now to mingle and get out what we could call the take homes. And this will be by none other than CPA Kenneth Makanga, who is a partner with the BDO East Africa, and he will tackle the topic, practical aspects of business restructuring. So that's why I think that he would mingle the two and he gets out the juice. And the floor is yours. CPA Kenneth, please take us on. The audience is ready.
Thank you, CPA Obed. Good afternoon, CPAs and the participants. And I really want to thank Mustafa and Rita for doing justice and setting the ground for me. I'm just going to be sharing with you the practical aspects of some of the things that they have mentioned. But maybe before I start, it is important for me to also give assurance to fellow CPS to know that this association of insolvency practitioners is actually a live association. And for the record, I'm actually the vice president of the association. I'm the second in this association. And I thank my president for allowing me to be a very active VP and present here in this forum. So for purposes of this forum, I'm going to really talk about the practical aspects of business rescue. I'm going to share with you an introduction, and I think this one I will just quickly scan through it because Rita really laid the ground for me to define what business rescue is, and also when does the business needs to be rescued. I will share with you some informal proceedings on how to go about business rescue. I call them informal because they are not really exclusive to insolvency practitioners. From practice, the examples I will share with you, you will see that even typical business advisors, people who are not registered as insolvency practitioners, have prescribed some of those proceedings and they have provided relief to some businesses. Then corporate arrangements, and then administration that Rita mentioned. And I will close with some other consideration. Now, business rescue is something that really Rita defined very well. And this is just another definition to look at it. And I will not repeat here because I think Rita did the justice to explain what rescue is all about. And this is true if a company is in distress and likely from both a liquidity and a balance sheet perspective, not going to be around for the next 6 months in terms of satisfying its obligations. Now, Rita also actually did justice here and said the core intention of business rescue is to restructure the affairs of the company in a way that will really maximize the likelihood of the company continuing in existence. If it's not able to do that, but at least the results of the process will deliver better returns to the stakeholders and the creditors. So that's basically the core of a business rescue. And also Rita was actually very kind to explain that the insolvency law here in Uganda provides for mechanisms of rescue. At the same time, it also provides for insolvency practitioners acting as undertakers, basically to bury the business, which is the liquidation. But for purposes of this forum, we are really going to be talking about business rescue because that's the intention of the topic. Now, in my assessment, there are basically two approaches towards business rescue: the informal proceedings, and these are the ones I mentioned that they are not really vis-a-vis of insolvency practitioners. These are some of the proceedings ordinarily that might provide the relief to a business. And you will see that many businesses have actually engaged in this both informally and formally. And then the formal proceedings that result in reorganization, administration, and arrangements. So if you allow me, I will basically probably talk about the informal proceedings. What are the informal proceedings? One, which is actually something that I'm sure we are all very familiar with, is the government bailout. And maybe you'll allow me also to digress a little bit and mention that I know Mustafa mentioned that the Insolvency Act is going through Kujikwatako. Maybe some of the points I make here will be nice points to consider as you're amending the Insolvency Act to just formalize some of these approaches and make sure that they are actually driven and defined by insolvency practitioners. So, you know, some businesses struggle, and actually in the current COVID environment, you hear many people in terms of rent, in terms of support, they are crying out for government bailout. I think this is where the actual term of government etuyambe, government where are you, comes in. And the bailout can come in many forms. It can definitely be capital injection by government. I think we have seen some of these in Uganda. It can be soft loan. And actually, even tax waivers qualify to be a bailout, because once you get a waiver from government, that is a relief from a liability that could probably have really buried the company. And it can be as simple as, I think one of the key ones that I see the current government uses, off of a tender. I know some manufacturers who have got commitment probably to manufacture these face masks. Just a commitment that the government will give you that tender can actually bail out a business that you practically would have collapsed if it didn't get that kind of support. I think some of the famous bailouts that we can easily relate to currently, and these are actually driven by the current environment. We know what has been happening in the South African Airways. The government of South Africa has committed to injecting $1.8 billion, that is dollars, to just make sure that the company survives. Otherwise, without that commitment, South Africa would be in the history books, Airways would be in the history books, and definitely this business will not be able to sustain, because this actually in capital injection by the government of South Africa is towards settling the big creditors that we are tearing down this company. And there's another unique one, which is also another area. I think these examples are very close to home in terms of the industries that have really struggled because of the current environment. These guys have secured $1.5 billion. I think the unique one here is that the commitment is not coming from government, but private entities. You know that the person who started this company is somebody who we all thought that was really rich, but he could only afford 200 million pounds, and he had to get bailout from other private equity funders. I think one of the aspects as a takeaway maybe from staff and all of us who can talk to government is that when you look at Uganda, there's no official policy or legislation on how to issue bailouts. And this, I think, for me, is a room for abuse. If we can really recognize this as one of the approaches towards business rescue, I think it is important government really, it's high time they define at what point can the government bail you out and what are those criteria, so that the mafias in government do not actually abuse this process, which usually good businesses can actually benefit from and survive and be impactful going forward. So instead of relegating to those who can qualify for bailout to wear a certain color for you to get the bailout, my view is that that is one aspect that maybe as policymakers we can explore. The other informal approach, and I'm calling it informal because I think we have seen many businesses actually adopt this, is some contract restructuring. And this can be through operational restructuring, basically changing how the business operates, or financial restructuring, basically all just the credits and the data basically just reaching an agreement on how to modify some of the terms that they had originally agreed. And some of the classic examples here can be as simple as rescheduling debt repayments, change of maturity dates, and I think a core number of the banks right now is they are really participating in this process with their borrowers. But in principle, this is actually more or less a relief that clearly if the business doesn't get, would collapse. So it's a business rescue mechanism. I'm calling it informal, that people are actually executing them without probably even the involvement of insolvency practitioners, which if you look at the formal approaches recognized in the Act, you cannot be an administrator or a receiver unless you're actually an insolvency practitioner. So that's why I'm referring to them as informal. The other aspect, which I have seen for many of my clients, even debt and equity swaps or even write-offs, there are so many entities that I've worked with and have huge debts, probably some from their parents, and to improve the balance sheet, you could see that some of those debts get easier to be converted either into share capital and share premium, just to make sure that the entity is able to continue surviving. So these are some of the approaches that I want to say that are available to businesses from a practical perspective, might not necessarily be formally within the Act, but clearly they suit the definition of a business rescue. Now, what about some of those approaches that are formal? And these are some of the ones that I thought I could also share with you. There is a unique one here, which I think also Mustafa can guide because he sits at the regulator side. If you have ever seen any entity, take advantage of it. But when you look at section 234 and 245 to 245 of the Companies Act, it really provides that a company can actually reach out and call its creditors to summon for a meeting. And if it's able to convince 80% of the share, of the creditors to commit to a certain plan, that compromise or arrangement, and if it's really sanctioned by court, that meeting, it will actually bind even the rest of the creditors, the 20% that don't show up. So long as the court has sanctioned that meeting and you've been able to notify the members who are coming for the meeting and the resolutions from the meeting are registered with URSB, that is another compromise or arrangement that can give a company relief. From my records I've searched, I don't think I have any really practical company that has taken advantage of this option, even if it's not embedded within the Insolvency Act, but within the Companies Act. But I think for entities that probably have those simple 1 or 2 big creditors, this is an option that you can easily engineer and benefit relief from, even if 20% of the creditors are not able to probably come to the same table. I think one of the practical elements, for sure, if I'm a creditor and among the 20%, I would easily get a lawyer to get an injunction. I don't know how the lawyers do it, but injunctions are very easy to get. So probably a practical way of getting it might be a challenge. The other one, which is also an arrangement that formally can be recognized here, is that we all know that courts have powers to be able to encourage entities to have alternative mediation and conciliation measures. I have actually personally as an accountant, I have had 3 or 4 engagements where I have 2 different parties, a bank and their customer, who is represented by lawyers, and they appoint me as somebody who's just going to help them affirm the numbers to help in their mediation. And basically they come to me with terms of reference endorsed by the court. Basically that shows that if you're able to pronounce yourself on these matters that relate to numbers, both sides of both parties will respect your view, and that will be the basis that they will be using to be able to reach a reconciliation or a middle ground. And actually, for the 2 out of the 3, I got really positive comments that it did not even go beyond the mediation, because once we're able to produce the report backed up by the evidence we get from both parties, then the numbers become clearer and the discussions become more clearer. And I think that can definitely be one of the arrangements that can reduce in terms of helping businesses get relief if it is actually sanctioned by court. And as you know, definitely if you reach a consent judgment, it really supersedes the original terms that you have. So that's another mechanism from a practical side that as practitioners, we can advise our clients to pursue. Then the corporate administration, this one is, I think, also Rita did a very good justice to mention the provisions that guide this. And she was kind enough to explain that when you appointed the provision administrator or administrator, you almost have the same responsibilities as the director of the company. And so you have the mandate to make sure that you structure this business in a way that allows the business to become more efficient and probably chart a path of coming back to sanity. So this is one of the other formal rescue mechanism, and this is really formal because, like Ntare has explained, you have no business being called an administrator if you're not an insolvency practitioner. And we have, he has also guided on how you can be an insolvency practitioner. So these are duties. Actually, Rita really explained them very well. I won't repeat them, but it is very clear from these duties that when you're an administrator, you more or less have the responsibility to make sure that the business carries out and is able to pursue a meaningful strategy that can allow it to survive, because you more or less actually have the responsibilities and powers of a director. And when you look through the Insolvency Act, it is very interesting that you can even have the powers to appoint and even remove directors of that same company once the administration did or whatever court that order that you've got appointing you as a provisional administrator is very clear on that mandate. So some of the examples, and I think I just picked these ones which are closer to home. Uganda Telecom, we know very well. I think through the nice guidance from URSB, when the Registrar General was appointed as the official receiver, as the first administrator to guide UTL through this process, I think they were able to really put a full stop towards the death of this company. I know that an alternative administrator was appointed, but definitely for her to be appointed, she is also an insolvency practitioner, and the company is still undergoing administration. I think if it wasn't for this relief, Uganda Telecom would still be in the history books. But still on that same subject, it really points into one of the issues I mentioned in terms of an informal business rescue. It will really hurt me as a Ugandan to see Uganda Telecom collapse. Then 5 or 10 years from now, we start hearing politicians say that we don't have our national telecom. Why don't we start one? Just the same things that we have seen Uganda Airlines go through, because I think it went through administration, and then ultimately the powers be were convinced that that was not the right step to take. I'm more than convinced if we have a policy on government bailouts, then we will not have this kind of suboptimal decisions that I think, in my view, if we are able to approach insolvency in a more holistic manner, these kind of entities would really not go through the pain that they are currently going through. Because I think there are some entities who enjoy these bailouts that clearly, if we are to rationalize them, you could probably allocate them in a more meaningful way. I know remarks. I know one of our insolvency practitioner, our colleague, is actually an administrator for this entity. And I think clearly the path they are taking is just to bury this entity, but that is also another process. But as the process is going through, Afrimax first went through administration, and it provided some kind of relief to those former employees and all the stakeholders. Mustafa has mentioned about NAFMAT and all these other entities that clearly have benefited from some of these business rescue mechanisms. Maybe one thing I can say before I hand over to Mr. Moderator is that while we are preaching the gospel of business rescue, it is not an exact science. And I think as an insolvency practitioner and all aspiring practitioners, we owe it a duty and sometimes some professional judgment to give advice to our clients. You might find that in some instances, depending on the circumstance, it is possible that the liquidation, basically barring the company, might be more advantageous than the painful exercise of trying to really make the entity survive when we are just prolonging actually the end result, which will be death at the end of the day. So it might be possible in some instances where selling the business or finding out exit measures might be quicker, more effective, and less expensive. I wanted to mention that so that you also understand that as a practitioner, it is important that you weigh some of the options that you might have. While it is true, I think the first option should be to evaluate whether this business can be rescued and the different stakeholders get the optimal results. But I think we should not shy away from the fact that if the alternative is also possible, we should highly consider it. I want to end this presentation by re-echoing and thanking Mr. Mustafa for actually making the call. I want to call all my colleagues, fellow CPAs. I think it is important that we embrace and try to really join the association. I have learned so many things by working with Rita, by working with my president, Isaac, and appreciating the law better by interacting with these fellow colleagues and trying to champion this space that probably is a little bit new in Uganda in terms of making sure that the clients who need us for this kind of advice, they don't know even where to find us. So instead of really regulating these really tired and old words that this is our space as accountants, why are the lawyers here? I don't think it serves anybody purpose. I have participated in a transaction where I was a liquidator, and it definitely needed me at some point to petition court to get an order. In my limited knowledge of law, I could not execute that. So I had to definitely bring on board a friend in terms of a professional for law. And there are those transactions I've shared with you where the lawyers have humbled themselves, even if they call themselves land colleagues, and come and said, you understand the numbers, whatever you pronounce, we'll trust your judgment and we'll take it. So the room for really working together is there. And actually, I think even the Insolvency Act and regulation respects it. And it also accommodates, I think Mustafa can guide, that you can even have joint practitioners working on a transaction, a lawyer and an accountant. And I think if we bring all our talents together, we can definitely be able to provide insight and benefit to our members. I thank you, Mr. Moderator, and I want to end my presentation there.
Yeah, thank you very much. This has really been very, very, very enriching. And to us as accountants, I think the gospel is very clear and the call is loud out. And I think it is something that we are taking seriously. And the joint ventures, I think, are also very welcome. I think this is very, very important to us. Of course, the beneficiaries will be the clients once we are, once we get to know what we are supposed to do. So we thank you so much, CPA Kenneth, for doing justice to bridge the gap and show us how the practical aspects are being done, especially I liked the informal and the formal. So I think in either way, we are required. So money is there. It is to position ourselves in form of engagement and partnerships. So this is time for our interaction. And I'm glad when you look at the Q&A, most of the questions have been answered, except I want to go to the open ones, the ones that are not yet given answers. And I might not really give it to any Rita, Mustafa, or Kenneth, but I hope by reading it, I think they want to jump into the water. Really, we shall sort ourselves out. So the first question in the open ones is from Rita Natkunda, who is saying, is there anything that a business can do to reduce the risk of insolvency, especially in these pandemic days? Is there a possibility of saving business after insolvency? Please cite examples and experience of some of the businesses that have recovered in Uganda. Then another one is, if you are appointed as, this is from Andrew Mukasa, and he's saying, if you are appointed as a insolvency practitioner to carry out liquidation whereby NGO is turning into a company how do you go into it in terms of assets, liabilities of the NGO? So another one from Naiga is saying, okay, and I think that one is not a question. So let's answer those as I look into the answered ones. In case there is one that is really itching, we can have it. So please jump into the water, especially Kenneth. I think you can begin, then we see how the others can really reinforce it. Thank you.
Thank you, CPA. I think I will begin by trying to tackle this one of Andrew. Maybe my colleagues can really support me on the other. I think if I have understood Andrew's concern, saying he has an NGO, they want to close out, and probably that is voluntary liquidation, and definitely they want to come back as a company. How do you, in terms of assets and liabilities of NGO? Now, I think just thinking like an accountant, you might probably get concerned because I know for some of our NGOs, the way they maintain their accounting records, they actually expense the assets and probably even practice cash accounting that they do not accrue for liabilities. So if you look at the financial statements of really traditional NGO, you higher chances are you will not see the assets, neither will you see the liabilities, which is very critical in a liquidation process, because you need to itemize the assets and liabilities of the entity that is going whether voluntary or involuntary liquidation. I think what is important here is, if that is the approach that the client takes, is to understand that, and probably as an insolvency practitioner, if you don't have the capabilities, employ a professional who will have to craft the assets and liabilities of entity from scratch, from primary source records. That means ignoring the financial statements of the NGO and review the entity and try to draw up the register of assets. From an accounting perspective, even if an entity doesn't maintain or doesn't capitalize its assets, it's, I think, good practice and even expected from a responsibility point of view to maintain a schedule of their assets. So we'll have to extract those from whatever records they have, whether fixed asset register, or you have to do a manual count one, generate and attach values to them, and then also try to use the knowledge of accounting to search for those unrecorded liabilities that can be brought on board. So from there, you'll have a statement of affairs that you'll have to draft and probably authenticate and say, and that's where I'm telling you that as an insolvency practitioner, if the practitioner that has been appointed as a lead is a lawyer, this is the part where the accountant is needed, because you need to craft the assets and liabilities, certify them, and they become a true record of the assets and liabilities of that entity. And from there, then you can take the step forward on trying to close down the NGO. And for that process, definitely that can be guided on the current law. And once that is done, then you can really renew the entity through the other framework. Though I think, and maybe Mustafa, if he's privy, and my colleagues, to the best of my knowledge, I know some of the NGOs have a dual personality. They get registered as a company limited by guarantee and secure an NGO certification from the NGO. So in that case, I don't know whether you need to, if that is the mandate they have, maybe you might have to even deregister it, voluntarily liquidate the company limited by guarantee, and maybe register it as a company limited by shares. So I hope I've really addressed your concern, Andrew. Then I will ask my colleagues to probably support and respond to Rita and the other question that the moderator pointed out.
I think even one is in your docket, because it's like specifically business.
Mr. Moderator, I beg your pardon?
Ritas is in your docket. It's like saying,
yes.
Is there anything that the business can do to reduce the
yes.
especially days?
Okay. I think, Mr. Moderator, I don't want to say it's purely in my docket. I think all of us can take a stab at it. I can give my text scan and then Rita Mustafa or even my president can have a take at it. I think
okay, just
like
then we can go to Rita.
Okay, I was saying that from my presentation, I think the businesses should really be open to pursue both the formal and the informal approaches. And for me, I think if you look at what is going on currently in the media and the space, you see many people actually crowding out for the informal kind of relief. You see many businesses reach out to their landlords or even some who are crying to government for relief. I can tell you, being in my position, I'm also a leader in my own right in my firm. I was really actually pleasantly surprised when I got a letter yesterday from my landlord saying they are giving us a credit of over 30% on our rent from April to June, even if some businesses are not asked for it. For me, it was really a pleasant surprise. That kind of relief that if you really have stakeholders that are more interested in your survival, is one of the few small steps that you can take relief of and really guarantee that the business survives. In this business, having a relief of landlord not asking for rent or giving you a relief for 2 or 3 months is a really big push in just making sure that the business can survive. The other aspects will be as simple as what I see the central bank has pushed all the financial institutions to do. You engage your lender, ask for really more, in terms of payment reliefs that are conservative, communicate with the other stakeholders. I've seen many businesses that have asked their employees to kind of take a pay cut and probably even defer salaries and other bonuses. So those are all many incremental aspects you can take into account that can really give you relief before you even think about the big formal administration and getting protection from the court for your creditors. Over to my other colleagues to contribute.
Yeah, is there anything that can be added on, Rita, Mustafa?
Yes, just to firstly thank Kenneth for the responses, which I fully associate myself with. But I would wish to probably add, starting from even what he has stated, how a company avoids insolvency really is the same question of how do you manage a situation when you have run out of cash. I mean, before you even look at the bigger picture of a company, but we all we manage our personal finances. The question is, how do you deal with a situation where actually such finances are reducing? Of course, as Kenneth has pointed out, you have to look into the operational costs, the expenditure, your daily expenditures, the same way the company look into its operational costs and take even drastic measures in some cases. I would also wish to say something in relation to a question which was raised about a liquidator of an NGO that is transiting into a company. First of all, according to the existing law, the current law is that all NGOs are now supposed to be companies limited by guarantee. Initially, it could be an NGO when it's not a company. But I know the NGO Act was amended fairly recently, I think like in 2016 or 2017. And all NGOs are now required to first be incorporated as companies limited by guarantee. And the company limited by guarantee and an NGO share one common element, that they are all non-profit. So I would imagine that in that case, it is an NGO which has been operating for a long time as an NGO. Now it has been required to transit into a company. It's a very simple process. You first incorporate a company limited by guarantee. Let the NGO pass a resolution to transfer its assets to the company limited by guarantee and then get fetch certification. And an NGO being an entity almost without legal existence, then it will be a process concluded as simple as that. The other point, which I think those are the major questions which had come to, yeah. Someone asked John Sevuma, what are the opportunities we can harvest from to get insolvency business? I'm not so sure whether I understood this question, but the starting point is to get qualified to practice as an insolvency practitioner. In my presentation, I mentioned that we maintain a register of insolvency practitioners. And on a number of occasions, people walk in and they want to make a decision on whom to appoint as an insolvency practitioner. And the register of insolvency practitioners can be inspected by those people. And some appointments actually made by people looking at the insolvency practitioners register. Person goes through the list and finds a name which he is familiar with and says, no, let me appoint so and so to be the liquidator. So if you're on that list, then there's no you can expect opportunities to come your way. Starting point is to be on the list. In other words, you become searchable. When you become searchable, that's when you can think of getting those fresh appointments. I think that's all I have, Mr. Moderator. I know there are others which I probably haven't got time to read through, but maybe there is one from Mr. Henry Owen is asking, is there an opportunity for court to assess the viability of a business before giving interim relief so that only the deserving business are afforded protection? In most cases, the court will not go at the initial stage, will not go into the possibilities of revival of the business at the initial stage because the key responsibility of an administrator is to actually study the business. You take up, when you're appointed, you have to analyze the affairs of the company and come up with a roadmap or an action plan for its recovery. And the interim protective order is normally issued at the initial stage. So usually the court's judgment may not necessarily be influenced by your proposals at that stage, because it is the court order which actually makes your appointment effective. Then you go and study the company affairs for 30 days. The order is enforced for a maximum of 30 days. Then you come back with a comprehensive report which you present to the creditors and then to court. So probably that's when the court will be able to assess the proposals we are putting on the table. But at the level of application of the interim protective order, it's really at the initial stage, and even in most cases, even you as an administrator, you are still gathering information from the directors. So it's unlikely that the court's decision will be based on the viability of the proposals. Allow me, Mr. Moderator, to comment on a comment which comes from Mr. Washington Musamali, who suggests that lawyers should be excluded from IP list as they have all legal ways to hide them during the execution of insolvency. I think allow me to just restate what I mentioned earlier, that as regulators who have interacted with both lawyers and accountants, this one I will say without really any fear that you all need each other. I will not mention names, but I know accountants who have handled estates and they are just messing it up. The administration ends, the administration bid ends like in January, the man is in office running the insolvency estate as an administrator. Clearly, he doesn't know what is required to, what the law requires him to do. Similarly, a lawyer, as I mentioned in my presentation, is not good at numbers. He also needs someone to guide him in numbers. So I once again restated that everyone is important in this profession. Let no don't lie to yourself that you can handle it alone as an accountant. Similarly, even lawyers can't handle it alone. Mr. Chairman, Moderator, I think those are the few comments I had to make.
Yeah, thank you very much. I really would like to thank our audience for keeping it alive. You are still 300, no dropping. So that means really panelists, you are doing a great job. I would like to bring on board Rita to answer 2 questions, which I will combine. That there is little knowledge of practice, of insolvency practice among Ugandan population with companies. They are silently suffering. How can you reach out to such companies to help them in sensitization? And of course, another one is saying, what measures should government do to restore down in companies, especially local ones? Rita, come on board on those, then we can see a way forward.
Thank you so much, Mr. Moderator. The first question on the knowledge and the companies that are suffering, we can only, we are, as practitioners, we can go out and talk about these things. And actually, when my president starts to talk about the plans that we have as far as sensitization is concerned, but as members of this association, we are looking at avenues that we are going to use to advise and sensitize the public. Of course, we have to do this trying to balance our legal obligations, because I think from a lawyer's point of view, we are forbidden. We are not allowed to advertise our business or tout or for what is usually called ambulance chase. So for us, we can speak as professionals advising. Generally, we can write articles, we can take on interviews on particular subjects, but we cannot be seen to be focusing particularly on particular businesses. That is as far as the lawyers are concerned. However, with the support of our regulator, which I know that for the past few years, they have been putting the business community together at what is called the Insolvency Conference and different insolvency workshops that they hold. They've been inviting actually the business community and inviting some of us to speak to these people and introduce this subject to them, and to continue to encourage them against hiding their financial problems, but looking for counsel from the accountants and the professionals who can be able to guide them through addressing their financial problems. So from our professional point of view, we are able to, and we are doing what the law, within the confines of the law, and with the support of the regulator, we have set out a plan to continue on this agenda. As we go along, we are going to be seeing some of these activities that are going to be happening. I think that's the first question. I'm seeing the time is running. The second question is on government helping. I think they've already taken a few steps. For example, what Kenneth and Mr. Mustafa just talked about, the question of the encouraging banks to restructure facilities. That is one way to help you manage your cash flows and also manage your financial obligations. There's been an agenda to push for money to be injected in certain financial institutions so that there is cheap credit available for the public. In the developed world, and I don't want to compare us because we are living in different times, but in the developed world, and if you could look at Europe and Asia and maybe Australia and the US, governments are actually putting particular stimulus packages in particular funds to facilitate recovery from this COVID pandemic. I'm seeing landlords are being paid directly for some businesses. I'm seeing companies, governments are facilitating employers to pay their employees so that they don't make redundancies or restructurings. They just enable them to pay, they facilitate payment of salaries. some of these things can be done by our government, but we know the limitations that we are faced with. Some companies can be bailed out directly. We have some very important sectors which are going to suffer. And I keep telling some people that because of the nature of our economy, we may not be able to know the impact of COVID until about a year or two after. And then we shall hear what actually happened to businesses and people. And so if our government can, and through maybe the regulator as well, can monitor the insolvency trends that are happening in the country, then we could be able to pursue an argument for packages if they're possible for particular companies. And I pick this to also answer a question, the Rita's question on how examples of companies that have been that have recovered. If we're to look at yes, if we're to look at the 2008 crisis where governments had to actually come out and save their businesses, there are prominent companies that we see now that were actually collapsing in 2008, and their governments came out and literally pumped money into their businesses. Apple well got an investor, but Chrysler that we see now was actually going bust. GM Motors was actually going bust, and they got government support. So just a few examples to speak. But within the abilities of our government, pumping money in financial institutions for cheap credit, the restructuring of the loans, and then of course the drive to push creditors to be gentle, to slow down on enforcing their rights, so that we can address this situation together is one of the things that I'll think about. Thank you, Mr. Obed.
Yeah, thank you very much, Rita. Thank you very much, Mustafa. Thank you very much, CPA Kenneth. We are really grateful to you for the time and the knowledge you have shared. And to the audience, we are really indebted to you. It is great. And allow me to extend my thanks to the Insolvency Practitioners of Uganda and the Institute for bringing this together. And at this point, I would like to take the opportunity to call upon the President, and that is none other than Isaac Bakayana. Please take on the floor. And this is the audience, up to 300 members. They are willing to listen from you. Thank you.
Thank you very much, Mr. Moderator. I'm glad to be here. I am thankful to my colleagues, Rita Waguma, Mr. Antali Mustafa, and Mr. Makanga Kenneth for the presentations. I thank the participants for raising the questions. Some I have attempted to answer through the typing field, and others my colleagues I have answered. So I thank them. Mr. Moderator and my colleagues, my role is twofold. One, to give a brief on our association and an update, but also to, sorry, I hadn't put on my video, but also to give some closing remarks. I have seen the comments, and I have noted the comments of lawyers being accountants complaining about the lawyers, but I agree with the comments that have been expressed by Mr. Antale that we need to work together. And in working together, we have formed an association. This is the Association of Insolvency and Business Restructuring Practitioners of Uganda. When you look at our constitution, we are made up of advocates, lawyers, we are made up of accountants, we are made up of chartered secretaries. All of us come together in this association, and our objectives are to promote, to advance, to protect the interests of all members involved in insolvency and restructuring. So we are in this industry together to work together. When you look at the objective, the second objective of our entity, it is to coordinate the Uganda Law Society, the Institute of Certified Public Accountants, and Institute of Chartered Secretaries to work together. So we have an association. It is registered. It is a registered association. We have a governing council. That governing council is made up of myself as the president, Mr. Kenneth Makanga, who is my deputy president, he's an accountant, Miss Akelo Ann Brenda, she's a chartered secretary, and she is our secretary general. We have Mr. Andrew Munanura, who is a lawyer, and he is our treasurer. We have Miss Juliet Adong, she's a chartered secretary and a member. We have Mr. Julius Tumuhimbise, an accountant, and he's also a member. And finally, we have Miss Rita Birungi Baguma, a lawyer, who is also a member. So we have our association. It is already registered. We take on membership from all of us. Please come and join this association. Our membership fees are a one-time payment of 1 million shillings, and then an annual payment of 400,000 shillings. I have seen the question of how can we do business, where are the business opportunities? If we come into the association, then we can have these synergies working together and helping a couple of entities. What have we managed to achieve? The first one, as I have noted, is to have ourselves registered. We are duly registered. This year, we managed to, after our AGM last year, we agreed that we needed to change the name to suit what is in the law. So we changed that name to what you're currently seeing. We have worked with the Registrar General, and indeed this year we have had, in addition to this training, we have had an invitation from the Registrar General to facilitate the training of judicial officers on insolvency law. Unfortunately, this one was affected by the outbreak of the COVID pandemic. We were also invited by the same Registrar General to participate in their retreat, which was this year, January, and we presented on building synergies for an effective insolvency system, the expectations of insolvency practitioners. We have partnered with the Institute of Certified Public Accountants. That is why we are part of this webinar. We are working with the Uganda Law Society as well. And these are efforts that we are undertaking such that we can build synergies with these respective entities and also build businesses and also be able to serve the businesses of this country. The thrust should be, and I think as has been emphasized by both Rita and Mr. Makanga, that we should be able to help businesses come out of their problems, not to kill them. So our thrust, I think, as insolvency practitioners in our association should be one where we build synergies such that we build the businesses, and then consequently we are participating in the building of the economy, we are participating in creating jobs, we are participating in so many other things. So through this association and through these synergies that we are building with the Uganda Law Society, with the accountants, with chartered secretaries, so many other entities, we can work together with the Uganda Bankers Association, we can work with CASITA, we can work with the different entities to make sure that actually when we work together, we can actually contribute to the wider economy, Uganda in which we live. We have an approved work plan for 6 months. And within that work plan, again, we are looking at we are looking at how we can reach out to you as our members, how we can encourage you to become part of the association, how we can actually encourage you to go and register with the Registrar General. I was having a look at our register, and for this year, 2020, I think as at about 2 weeks ago, we have only 54 registered insolvency practitioners. So, and when you look at the 54, the majority of them are actually lawyers. I think up to about 45 are lawyers, and then the rest the other professions. So I would encourage you, our colleagues, the accountants, to really reach out to the Office of the Registrar General, get yourselves registered, and if you think you're having difficulties in having yourself registered, you have our association. You come to me, you can call me. My number is 751-893356. I'll say it again, it's 751-893356. Reach out to me and then I can be able to help you. We are online, we're on Twitter, Insolvency U on Twitter, and then on Facebook. We have formed a WhatsApp group for insolvency practitioners to make it easier for us to quickly communicate, to quickly share information, to quickly share updates, to quickly see those opportunities which we can work with. So If, again, you want to join this WhatsApp group, kindly send me a message on my number. It is 0751-893356, and I will add you to the group, and we can share ideas on that platform. Those of you who have not registered, I want to urge you again to go and register with the Registrar General, such that you can become now a recognized insolvency practitioner within the laws of Uganda. So I am very grateful for having this webinar. I'm very grateful that over 300 participants agreed to participate. I'm grateful to the presenters. I'm grateful to the moderator for having time, bringing us together, sharing ideas, and this discussion should not end today. You can join us on Twitter, you can join us on Facebook, you can join us on the WhatsApp group, so that we work together on how can we solve the problems of our businesses, how can we solve the problems of other businesses, how can we help Uganda become a better place. I don't believe so much in pointing the finger to government. I believe strongly that we should work together, we should save businesses, we should participate in creating employment, such that at the end of the day, all of us are living in an environment which is beneficial to all of us. So I thank you very much, Mr. Moderator. I thank you, the participants. I thank you, the presenters. I hope to see you again. Kindly feel free to contact me, to contact us in the association, so that we can continue working with you. Thank you very much. Over to you, Mr. Moderator.
Yeah, thank you very much, President. We are really glad as accountants, and that information of saying that you have 54 people and 45 are lawyers, that's a good information to us. The appetite is raising. The ball is really in our court. And allow me at this point to call on to the institute, and that is the CPA Ntangare, to give remarks as we bring this to a close. CPA Ntangare, are you on board?
Yes, thank you, Obed. My video can't show. On behalf of the Institute, I would like to thank our partners, the Association of Insolvency and Business Restructuring Practitioners of Uganda, and the chairperson for steering us through this afternoon. We are now more educated about the business rescue and insolvency practice, and I think more accountants will take advantage of the knowledge they have acquired this afternoon. The presenters, once again, thank you very much. We are grateful for sharing the knowledge and reservedly. I would now like to wish everyone a pleasant evening and declare this webinar closed. Thank you.
Yeah, thank you.